Hi, it's Nero here from Investment Rise, and recently I got a question from one of the videos that I put out, and the question was this: Nero, do you think interest rates will rise? And if so, what impact will that have on the property market? Now at Investment Rise, we're not economists, so what I'm about to say is not financial advice at all or tax advice or anything of that nature. But as a company that looks to help clients find properties in locations with great scope for capital growth, where it's also very, very easy to get those properties rented, we do need to have an idea of what the economy is doing. And so interest rates do play a big part in the movement of property prices. Now, I believe though that what's going to happen with interest rates this time is going to be a little bit different. At least the impact of interest rates will be a little bit different than what's happened previously. Let me explain. Right now we know the Sydney and Melbourne markets have definitely slowed down. The direction of the market has changed and those markets now are falling, and the only question people are asking is how much will those two markets fall? Previously though, those two markets have really only fallen when interest rates have risen. Whereas this time, those markets are falling even when the interest rates has stayed at record lows for so long. So what's caused the change of direction in the market? Well, primarily it has been tighter lending restrictions, firstly on domestic investors, local investors, absolutely, but also tightening up on foreign lending and lending to overseas buyers. The lending restrictions both on domestic investors and foreign investors has had the impact that interest rate rises normally would. So the Reserve Bank of Australia hasn't had to increase interest rates. But we do know at the moment that the Australian dollar has fallen by I think about 9 cents in the last 12 months. And that's in response to the fact that the US has started increasing their interest rates, and the US is still expected to increase their interest rates, which means that Australia will need to follow suit at some point. So the question, I don't believe, is if interest rates will rise, but when. All right, now the only, caveat to that is if there is some major global standoff, maybe between China and US or whatever, then, and that has rather a negative impact on Australia, then maybe interest rates will fall. But that's unlikely. The most likely movement, if you've read any of the previous Reserve Bank of Australia announcements, is that interest rates will rise. Now, mind you, we're talking about the Reserve Bank of Australia. Other banks, many of the major banks, have been sneakily increasing rates, especially for investors, over the last little while. Right, so we're already seeing rates starting to rise, at least from the bank perspective. So as consumers and as investors, we're paying the price of high interest rates. So even when interest rates rise, I think what we'll find, number one, it'll be a very slow rise because the Reserve Bank is going to be very cautious about the fact that the Sydney and Melbourne markets, which are the two biggest markets in the country, are already slowing down, and they don't want to have an impact of really sending the markets into free fall, which I don't believe is going to happen anyway. And so we will see interest rates, yes, rise, but it'll be slowly. And what I think you'll see is that it'll have a fairly minimal impact on the Sydney and Melbourne markets because of the lending restrictions that have already been in place so far. So what I think will happen is that as interest rates start to rise, you'll probably see the lending restrictions relax. So the two will sort of compensate for each other, thereby seeing a very minimal impact. What it will do though, when interest rates rise, it'll take longer for the Sydney and Melbourne markets to bounce back and start their next growth phase. All right, because when interest rates rise, then obviously affordability becomes even more challenging in our two biggest markets. And so if and when interest rates rise, it will take longer for those two markets to bounce back. And that's why for many of our clients who have a time frame, who are looking to invest in property with a time frame of 10 years or less, I always say, be careful about investing in Sydney and Melbourne markets, because I'm not sure if those are the two markets that are going to come right and give you the growth that you need over the next decade. However, what about the other markets? Well, again, before I go into those, Sydney and Melbourne, those two markets, especially Melbourne, has the worst rental yield in the country right now. So therefore, affordability is going to be a bigger issue when rates rise. But some of the other markets, like your Hobart and Brisbane, for example, which have much higher rental yields, those are the markets that are going to become more attractive. Why? Because if interest rates rise, people have to pay more on their mortgage, and if you want to buy an investment property where the rents cover the mortgage, you need to start looking at markets that give you a better yield, especially when you still also want to get capital growth. So I think what you're going to see, and this is what you'll also see when you go back through history, is that when rates rise, and I think it's going to happen again here, the Sydney and Melbourne markets will continue their slowdown. I think the slowdown will be longer because of rates rising, but those markets that have great potential for growth, that are giving you stronger rental yields right now, those are the markets that will attract more capital, more investment, and those are the markets that you'll actually start to see perform better as rates start to rise. Let me know what you think about this video in the comments field below, and if you think it can help someone who wants to invest but is uncertain about the impact of interest rates, I'd love for you to share it with them. Bye for now.